All you ever need to know about finance in a small piece of paper. Let's go. So, people may overcomplicate the way they handle their money and the way they invest it and stuff like that, and there's courses about trading and this and that, but essentially when it comes down to it, all you really need to apply a few rules in your life in order to create yourself abundance, to create yourself a nest egg, to create an amazing retirement, and that's all you need to know. Rule number 1, invest 10 to 20% of your income in index funds. I've talked about this previously. Basically, people that day trade and try to beat the market every day, every year, they lose money. And people that invest over a long period of time in index funds, which are basically groups of stocks that represent the economy, like Google, Microsoft, and stuff like that. Look at S&P 500 if you want to check it out. They basically get constant returns, and on average, it's about 7 to 10% every year, which is a great return on your investment. So, index funds. Invest in them. Number 2, budget your finance and set goals for the future. If you don't know where you're going with your finance, you probably never get there. So it's important to set goals like, I want to have, $100,000 by this age. I want to have $200,000 by this age. Okay, how much do I need to earn? How can I get there? How much do I need to save? All those things are things that you need to think about in order to reach your financial goals. And the other thing is make sure you're budgeting. If you're not budgeting your money, how do you know if you're losing money every month or going into debt or making too much money and not investing? You need to budget your money in order to make sure that the money goes to the right areas and that you're not obviously going into debt. Number 3, do not buy things on credit with high interest. So personal loans is a big no-no because personal loans have high interest and paying interest is just money going to the bin. So yeah, sometimes it's great to put $50,000 personal loan, buy a nice suit or something like that. But that $300 to $400 to $500 you have to pay every month for the next 5 to 10 years is not really smart, because a lot of that money just goes to interest, and that's just money going to the bin, making it more difficult to save and to invest. Number 4, never buy or sell individual securities. So day trading, stocks, cryptocurrency, commodities, futures, whatever, all that sort of trading is actually really risky, and it's been proven that 99% of people actually lose money on a long period of time. So yes, maybe they'll be making money a year or 2, 3 years and be happy in talking about it, but over a long period of time, people usually lose money because they find it very hard to control the emotions, and they also don't have the advantage that some companies have out there, like different softwares and a lot of money that they can invest in that part of their business. So day trading, not good. Investing in the long term, very good. Number 5, always pay your credit card debt. So just as your personal loan, make sure you pay that credit card debt because it usually has high interest on it. And if you don't pay it, you have to pay interest, and that's money going to the bin again. Number 6, double down on your retirement account. This is something that I only recently done, so I can't preach about it too much, but I think it's a very smart idea because you actually avoid paying tax. And that means you can save that money for yourself in the future. So in Australia, we have to pay 9.5% of our income into retirement account. That's just something we have to do. But you can also double down on that and increase that percentage. So I increased it to 20%, and that means on that 10% I don't pay tax, and that 10% just gonna keep compounding in my retirement account, and my future self will be very, very happy that I've done that my whole life, and it's just gonna create a much bigger retirement account for me in the future. So yeah, double down on your retirement account and maybe contribute more percentages if you can. And number 7, buy a home that is a smart investment when you're financially ready. Okay, what does it mean, smart investment? In Sydney, a lot of people are buying houses with the idea that their price is just going to keep going up, forever. Buying $2-3 million houses, and the money they get when they rent it is 1% or 2%. Not even 0.5% of the rent amount they get from that house is the return on the investment. So that's not the best investment you can make. There are some houses that cost a lot less, like $400,000, $500,000, and the income you get from renting that house out can come up to 5%, even up to 8% in some extreme cases. So that's a good investment. Something that yields 5 to 8% is safe, is nice. That's, to me, a smart investment when it comes to property. And obviously, but when you are financially ready, you don't want to stress yourself out from a financial perspective by paying, you know, a high mortgage or a mortgage that will increase significantly if the interest rates go up. So always buy something within your means and something that won't cause stress in the future. And that's about it. 7 really simple rules that, you know, even if you apply some of them or just some of them in your life, you will get very good results. And that's really all you need to know when it comes to finance. Obviously there's a lot more, but these are the most simple things that, you know, an average Joe can apply and actually get great results over a long period of time. I hope that was very helpful and that you got something out of it. If you like this video, please like it down and click that like button. That's what it's for. There's no other reason it's there. And also subscribe to the channel if you want to keep watching financial, educational and fun, entertaining content. So catch you later.